Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, May 6th, 2014. We had kind of a strange day. We had a pretty good gap down on the open that was ultimately recovered by the market, and we put up some pretty decent numbers here on the close, with especially on the Nasdaq side, with the Nasdaq up 11 handles after gapping down. Much more than that on the open. The market internals at the end of the day weren't great. Even though the ES was up, we were still negative by a few shares with the market internals. And the advanced decline on the Nasdaq side closed at minus 341. So even though the Nasdaq side did advance, we still had negative market internals. So even though today was a positive on the top line, and was something that the bulls could point to the bears not really having any teeth, the market internally is still struggling here. Having said that, though, the market did leave a fair amount of upside signals off of our proprietary scan. So make sure you take a look at that video as well, and see what the market really kind of laid out. The other key takeaway today is while the market was up on the day, the internals were weak. There's also very light volume today, which should definitely be figured in. Hopefully we'll see a little bit of a pickup tomorrow. We've got some treasury auctions coming later this week and some other economic data, and hopefully we can get back to a more normal rate of volume to really support the trades that we're targeting for this week. Here's a look at the ES futures, and we did wind up closing today with an 1875 handle. So right back to that key area. We've been here so much. This 1875 level has been in play so much. It's just remarkable. So as far as the levels go, the high from Friday is going to be the level to watch at 1855.5. To the downside, we did use the 50 DMA intraday, which is roughly that 7/8 level that you see there. So definitely keep an eye on that to the downside. If that breaks and we roll to the downside beyond that, then the 6/8 level at 1843 3/4 will come into play. Here's a look at the NQ futures. The NQ futures also pull back to a key level. This was the 4/8 level at 350, 35.93 3/4. You can see all the congestion in this area previously. Also, this high open here was rejected by sellers, so we're back up into that area, just kind of working that. The other key takeaway here is that the 50 DMA is just overhead, and that's going to be a key thing. If the market can take that out to the upside here, and the NQs probably going to wind up putting this 6/8 level at 36.72 in play. To the downside, clearly the level here that's been in play here at the 1 bar, here at this area, and then again here where was the low previously, and then this big tail down here. This is going to be important here, this 2/8 level at 35.16. Take a look at the TLT now. The bonds had a down day. We got up to that 8/8 level at 112.50 at a down day, but keep in mind though that we're still inside the previous day's range. So once we resolve this range and break out one way or the other, we're going to have a little bit of a better move here. Plus 1/8 level, we're going to be into the overbought territory if we do break out to the upside. That's the one to watch. To the downside, the 7/8 level at 110.94 is going to be important. We've got a couple auctions coming up tomorrow, Tuesday. We're going to have a 10-year. And then on Wednesday, we're going to have a 30-year auction. So all stuff that definitely could move the market with this new supply coming on. Oil futures are 9 bars down. We really haven't responded just yet. We're still just kind of gaming this 4/8 level at 100. We opened up in that area today, but we settled a little bit lower, settling down about 99.47. So right now we do have a little bit of a downward bias, though we are range bound over the last 3 days or so. There's a lot of resistance overhead. We've got the 200, the 10, and the 50 DMA to deal with overhead. To the downside, this 2/8 level at 96 and 7/8 is going to be the one to watch. Gold futures we're a little bit higher on the day, pushing back up here and starting to interact with that 50-period moving average again. We've been completely range bound here for the last many weeks here. So if we do break out to the upside, the high of the range is going to be in play at about 1330, 1331. To the downside, the low of the range is going to be what you want to watch. And also note that we are 8 bars down in the seeker countdown phase. Here's a look at the late cycle multi-sector daily chart. XAU didn't do too much on the day. The banks were generally weak today. We had some pretty good movement out of JP Morgan and Citigroup to the downside. That definitely weighed on the average there. The oil services were fairly flat, but we did see some downside activity in the transports. Want to take a look at this chart here in a little bit more detail. That is the transports, and let's take a look at that right now. Here's a look at the Dow transports. What we got to be on guard for here is a lower high setting up. We have this high close up here. We've got a lower close here. If we do undercut this close here, we're going to have a confirmed lower high, and we're probably going to wind up putting this 2-ace level in play. But it's too early to call that right now. For now, we're still short-term positive. We're still printing closes above the 10-period moving average. If we do start to roll down to the downside, this 50 DMA could come into play. We have our 13 exhaustion in place, but again, it's not one with a lot of extension to it. So this is probably more the end of an impulse than the beginning of a rollover here. BTK was pretty strong today, closing at its best level in a week. 5-ace level here is going to be really important. 25.78. If we can take that level, this 50 DMA, and then the 6-ace level will definitely come into play here. So that's definitely something you want to be on guard for. Possible higher low here, but we're not going to know until we get some resolution above this area right here. If that does happen, we definitely want to be looking at the long side of the biotechs. Next up, let's take a look at the XAU. Generally underperformed today. We're still totally boxed up here. We tried the 200 period moving average, but didn't really get through it. Definitely could be a really good trade here if as soon as we resolve this little mini range here. So definitely be ready for that and have both longs and shorts ready, which is a little extra work, but definitely going to be worthwhile. Here's the oil services index. This one's also totally wound up here. We got into this overbought area on the GAN box as it should have. That rejected price, when we settled back down here below this 8-ace level. Once we resolve this area, we could have a pretty decent move here. Move would actually probably be better and more powerful. It was to the downside, probably take it right to the 50-period moving average in one candle. But whatever way we resolve this, we have to be ready to go. The MACD on this one is sloping down, but we haven't gotten down to the 0 line yet. Another chart I want to talk about here is the hardware index. This is the computer hardware index, the HWI. This one's really starting to roll over here. We've had this broad area of distribution. We've lost the 50-period moving average. We're starting to roll down here a little bit more. We're starting to use this static trend line here, the red line, as support, which was the origin of this 9 bars up. If we lose that and lose this range, we've got some pretty good room to the downside here. The MACD is negative and below the 0 line, so it would actually be pretty easy for this to develop some downside momentum. So definitely keep an eye on this sector and all of the components, of course. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.